Hello traders, Day Trader Matt here at businesswithtrading.com, and today I wanted to highlight a coffee futures trade that we did last month. It was a pretty interesting trade, and there's a couple things I wanted to actually talk about with the trade. The first thing is we did enter right over here, and we actually exited up here. The reason we exited up here is because we also went short. And you know, when you go short, you can't be long and short at the same time unless you have multiple accounts. I don't do that. I'm not that complex of a trader. So we got out up here. Actually turned out to be pretty good. I'm going to record another video on the short trade, but right now I would like to talk about the long trade. So let's delve into that. Okay, so we got long right here on this candle. So right in there, 119.50, it was the entry. So let me write that down. I know my mouse handwriting is not that great, but my normal handwriting isn't that great either. So so we had an order at 119.50 that got triggered here. We also had another order at 118.50, which would give us a full position at 119, which would give us a stop at 118. So that basically a 1-point stop. Coffee futures, if you're unfamiliar, is $375 US per point. You know, and that's not really that bad. You know, keeping risk tight is really my #1 thing. You know, risk management, keep being able to manage my money properly. That's the main thing I'm into. And in our Momentum Trading Edge course, that's pretty much what I go over. You know, I teach everything that I do as far as looking for a trade. You know, how to identify trends, how to see when things are likely to begin and end, and how to take advantage of moves when they actually start happening. You know, that's pretty much what we talk about. You know, how to make money as a trader. That's what everybody wants to know. You know, when I first started trading, I was horrible at it. That's what I wanted to know. How do I make money? How do I stop being horrible? How do I stop sucking at everything that I do? You know, that's getting a little bit off topic, but it's something I want to talk about because I've been getting a few questions on that specific topic. And this will cover, you know, risk management, you know, what I actually do. So that basically, if we would have entered our full position, we would have been in at a one point per contract stop, which is very, very good. That's what I'm looking for. You know, anything under $500, I'm happy with. You know, taking $1,000, $1,500 per contract, that's not me. That's not what I'm comfortable with. That's not what I'm looking for. Every now and then, we are going to get trades like this, which is awesome, but mostly I'm looking for something, you know, 3-to-1, 4-to-1, 5-to-1, and then every now and then we will get 10-to-1, 20-to-1, 30-to-1. So basically the analogy is looking for base hits. Eventually you're going to get a home run. Rather than look for home runs, you might get a base hit. You know, you want to look at it the other way. Base hits first, and then look for the home run. To use baseball analogy. Football analogy, you're looking for first downs. You know, if you watch football, most teams, they don't throw in the end zone every single time. You know, they are looking for, let's get a first down here, let's get a first down there. Eventually, we can get a touchdown. And then every now and then, they might throw it 40, 50 yards downfield and get a nice play, maybe even get a touchdown off it. But anyway, that's a little bit about that. So we exited right up here at 135. And the way that we did, the way that I traded this, we entered 119.50 right here. Price did not come down, did not give us our next entry, so we only had half position here. Price chopped around, and our original stop was at 118. because we were looking for that 119 full position. We never got it. So what I did is I moved my stop up to 118.50. That gave me a 1 point stop, which is what I originally wanted, because I did not get my second order out. And as price started to move up, kept it at 1 point, price came down, came up, and when it took this out here, let me see if I can draw a line. That's a decent horizontal line. When price took this out, chopped around, and then went higher, right here, I moved the stop up below this. So the stop came here. As prices going up, we watched it. We saw this move here. Price takes this out. I moved the stop here. Then we watched it. Price chopped around. As it took this out, I'm looking for this area. And that's basically how we trade. We trail up, trail up, trail up. And I know a lot of people don't see trading as, a vehicle to grow their income, because the majority of traders fail. They lose money and they leave. They don't stay in the market year after year. The majority of people that come into the market. And it's because they come into trading for a totally different reason than what they should be coming into trading for. And there's a big issue with the different quote unquote educators and marketers out there trying to sell courses and whatnot, because they focus on easy, have this indicator, make a lot of money, do this, do that, and it's all just a bunch of bullshit. When I came into trading, I fell victim to that, of course. I had a long-term stock strategy that my uncle gave me, and it's awesome, but I wanted to be able to make money every week, every month, and to do that with a long-term stock strategy, it's not going to happen. So that's how I developed this. And trading is ultimately boring. This trade here, yes, it was very boring. It's great to get this type of trade, of course. This trade generated 15.5 points, which equated to $5,812.50 per contract. That's nice. If you're trading 10, 20 contracts, 50 contracts, you're making out like a beast. If you only got one contract, that's still good. That's the 3rd of May to the 17th of May. That's 14 days, 2 weeks. Now, I want you to understand this is not our typical trade. Typically we don't get into a trade that runs 15.5 points. This does not happen every week. But when it does, it's very nice. And I wanted to talk about it as far as how we manage risk, because that's a very, very important topic. And it's a topic that, a lot of people don't really discuss, and the ones that do discuss it get very, very complex with, different terminologies and crap. It really doesn't matter to me. Terminology, if you understand the concept, that's the most important thing. And that's one thing that I do go over a lot in the Momentum Trader's Edge course, is we talk about, I give a lesson, show you how I do everything, and then I give you some homework. You do your homework. And those that do that, and I encourage everybody, email me your homework, put comments below the video in the members area, give me some idea of where you're at, and I'm okay with helping. because I believe that if you put forth effort into your learning, I would like to be there to help. But if you're not going to put forth effort, I'm not going to track you down. That's not how this works. But anyway, hopefully you learned a little bit about how I manage my risk, how I look for things. This what was 1950. It was an area that I was looking at as possible support. Obviously, up here, I was looking for resistance. We took this short. Stay tuned for the video. It'll be out probably in the next few days, maybe next week. I'm not really sure. I'm going on vacation in a couple days, and on vacation, I'm not going to think about trading because you really shouldn't. And that's what trading really provides us. We're able to make money. We're able to go out and do fun things and not have to think about life. We can go out and have fun and just enjoy things. So anyway, hopefully you enjoyed the video. Thumbs up if you like it. Comments below. Love to see what you guys are thinking. Have a great rest of your day. Success to you guys. Thank you.